Welcome back to Teshkid FX for another Fantom price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Fantom chart, which at the time of this recording has lost the key area of support at around the $0.5 mark. We have also continued to hold above the 20-day MA here on the 4-hour chart, and we are just about to fully maximize our red target area down here in the formation of a larger ED12 count 2. We have also continued to obey the ED12 structures, where I still believe that whatever we are seeing is the formation of this second wave to the lower side. And before I get further into the technical analysis and also give you my next price targets here on the Fantom chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to continue with the video here on the 4-hour chart by first giving you a quick recap of what has been happening, where you can see that Fantom, after making its lower low at around the $0.16 mark, we started a massive bounce to the upside, obeying the ED12 structures, where you can see that I have this ED12 structure in red, having the first wave making its peak at around the $0.26 mark, before we started a corrective structure, where we also saw this ABC corrective structure fully maximizing the formation of that wave 2. And after seeing the low for that second wave, we started a massive bounce to the upside in the formation of this wave 3, giving us a peak at around the $0.3575 mark. And after seeing the high for that wave 3, we started a corrective structure in the formation of that wave 4. And after seeing the low for that fourth wave, we started another massive bounce to the upside in what has given us the peak in the formation of that wave 5 at around the $0.6574 mark. And after seeing the formation of this ED12 structure right here in red in a 5-wave move to the upside, I believe Fantom also completed an even larger ED12 count 1 to the upside of this ED12 structure that I have right here in yellow. And after seeing the formation of a larger ED12 count 1, whatever we expect next is a corrective structure in the formation of a larger ED12 count 2, and using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, that gives me a minimum retracement area in the formation of that wave 2 between the fib level 0.382 and the fib level 0.618, and that target area is between the $0.4709 mark and the $0.3543 mark. And I have marked that target area here on the charts using this red target area, and it is within this red target area that I'm expecting to see the low for that second wave. And once the low for that second wave is in, then we can expect another massive bounce to the upside in the formation of this wave 3. And in the formation of that wave 2, which is a corrective wave, I'm also expecting to see an ABC corrective structure play out. And I believe we are seeing such a structure right here, where we can term this as the wave A. Then we have seen that wave B making its peak at around the $0.6062 mark. And I'm expecting one more new low in the formation of that wave C to fully maximize the formation of that higher ED12 count 2, and sketching out a minimum target area to the lower side in the formation of that wave C using a trend-based Fibonacci, connecting it from the high of that wave A to the low of the wave A, then dragging the fibs to the high of that wave B. That gives me a minimum target area to the lower side in the formation of that wave C at the fib level 1.618, and that is at around the $0.3921 mark, which is a target area that is perfectly within this red target area that I have down here, within which I'm expecting to see the low for that second wave. So that means there are chances of seeing one more leg down to fully maximize the fib level 1.618 at around the $0.3921 mark in the formation of that wave C, and also fully maximize the formation of that larger ED12 count 2. And for that to happen, we need to continue holding below the key area of support and resistance at around the $0.5 mark. And as long as we are holding below that key area of resistance, then there are chances of continuing to unlock even lower prices. We also need to lose the 20-day MA here on the 4-hour chart, so that we do not have the support that we need for us to continue pushing higher. And once we break below the 20-day MA, then that to be enough confirmation that whatever we are seeing over here is a movement to the lower side in the formation of this wave 2, and we are going to fully maximize our target areas in the formation of that wave 2. And once the wave 2 is in, then we can expect another massive bounce to the upside in a 5-wave structure, having the wave 5 fully maximizing the formation of these higher ED12 count 3 to the upside. And once the low for that second wave is in also, I will be able to sketch out minimum target areas to the upside in the formation of that larger ED12 count 3. So that is what I'm expecting here on the short-term scenarios. And here for this second wave to fully play out, we need to lose the 20-day MA, and as long as we are holding above the 20-day MA, we can expect a bit of a short-term bullish movement, maybe to get us back to the area at around the $0.5 mark, which is now acting as resistance. And at that point, that is a key decision point, because we can either get rejected or maybe manage to break above it. But once we get rejected at that key area of resistance, in case we see a move to back to that key area of resistance, then I'll be expecting a massive pullback over here to fully maximize our target areas in the formation of that higher Elliot wave count too. So that is what I'm expecting on the short-term scenarios. And before I give you the long-term scenarios that I'm expecting to play out, allow me to first take a look at the indicators, where on the RSI you can see we are trading at around the 46 mark, meaning we have massive room for us to fully support lower prices in the formation of that second wave. Also taking a look at the MACD, on the MACD we have been able to print a bullish cross, meaning there are chances of seeing a bit of a short-term bullish movement over here before we can continue seeing lower prices to fully maximize our target areas in the formation of that wave 2. And jumping to the daily chart to give you the long-term scenarios that I'm expecting to play out, here on the daily chart you can see that I have this Elliot wave structure in red, where you can see that from these low prices that we had been trading within, we saw a massive bounce to the upside, seeing an all-time high at around the $3.5 mark in what I'm terming as that first wave to the upside. And after seeing the all-time high, we started the bear market, where we had been seeing lower prices in this ABC corrective structure in a move that gave us a low at around the $0.16 mark in what I'm terming as that second wave to the lower side. And after seeing the formation of a second wave, whatever we expect on the long-term scenarios is a bounce to the upside in the formation of a larger Elliot wave count 3, which is an impulsive wave. And because of its impulsive nature, I will also expect to see a 5-wave structure in formation, having the wave 5 fully maximizing our target areas in the formation of that wave 3. I also have a target area here on the daily chart in the formation of that larger Elliot wave count 3 at the fib level 1.618, and that is at around the $5.7395 mark, and that is the minimum that I will expect Fantom to do on the long-term scenarios and also on the short-term scenarios. And let's be patient and see how that plays out, and I'll be keeping you updated.